guys, welcome back to my channel. In today's video, I'm going to be walking you guys through a simple step-by-step guide on how to use my hybrid system, because I'm going to be walking you guys through my confluences you need to point out before you take any trade setup, being it the gold market or the crypto market or the forex market. With that being said, guys, let's dive onto the video. Not to make this video to be any too long, I already make out the markup and these are trades that I took and I've already made the analysis, so I'm going to be explaining how I got all these sniper entries in the market. So the first thing I do, I have to check on the trend, what the market is currently doing. Now let's look at the trend. So talking about the trend, we're going to be looking if the market is bullish or if the market is bearish. Next thing that we're going to be pointing out is our point of interest. Since we understood that the market is buying, where are we going to be buying the market alongside the big players? Okay, this is what I call my point of interest. And next thing I'm going to be looking out for, we're going to be looking out for break of market structure, okay, BOX. And the last thing that's going to be validating is our trade setup is going to be our structural liquidity, which I call SLQD. So having these in check, you can be able to trade the market profitably using my hybrid system. So now let me break down how I took this trade setup 1:11, but I did close out on all my accounts when price gets to 1:9, because this is my max trading gold market. Okay, so let's drop this here. So the thing that I point out here firstly was what the market was doing. So the market, obviously it's a gold market, and you know that gold has been tanking to the upside for a very long time. We knew that the market was a bullish trend. So the next thing that we need to point out on, where are we going to be buying the market? So talking about where we're going to be buying the market, this is my secret right now. Okay, talking about my point of interest, I usually combine my point of interest with a fair value gap and a liquidity candle. This is what I mean by fair value gap and a liquidity candle. Let me zoom out for those using phone. So this is our point of interest. Okay, this was where I marked out to be our point of interest. Now let me take this guy out so I can be able to explain how I got this point of interest. Now we can clearly see at the left hand side that this was a low, here was a low that grabbed liquidity. Okay, so how did this thing happen? We saw that this big candle right here splash down and take out these stop losses right here, take out this low before start buying to the upside. So this is what I call liquidity candle. So all I have to do, I have to mark the candle from the beginning to the ending of the candle. So I'll mark it out. So this region is where I'm going to be looking out for buys. These are areas that I'm going to be looking to start buying the market. So now inside this liquidity candle, I'm going to be looking out for two things, which is my order block and my fair value gap. So when I see that, I'm going to be compressing them together to have a smaller stop loss, then I'll buy the market alongside the big players. So this is all I do. Now I'm going to be looking out for the order block. You know what order block is? The last candle before an impulsive move to the upside. This candle happens to be our order block. So since this one happens to be our order block, sorry, let me use this. So since this happens to be our order block, where is now our fair value gap? And before we go further, what is a fair value gap? A fair value gap are regions where orders needs to be filled in. Just imagine that you purchase a wristwatch for $50 and you pay with your credit card. You're waiting patiently knowing the fact that those companies are going to deliver your wristwatch to you because you've already placed your orders. You're waiting for them to fill in your orders, to take your orders. Okay. In Forex, it's the same thing. There are so many orders that are placed, but those orders are not being taken. This candle happens to be that candle that a lot of orders has been placed but has not been taken yet. Okay, so now let me point out the fair value gap. It's from here to this region. Okay, so everything in between is called your fair value gap. Guys, I really hope you're paying attention. So everything in between is called your fair value gap. So this is what we call a fair value gap. So let me remove this since you understood what a fair value gap is. Now inside our point of interest, which is this big liquidity candle right here, this black candle right here that caused all this catastrophe, that took out all the stop losses right here. This candle happens to be our liquidity candle. So inside there, we're able to fetch out our fair value gap and our order block. So this happens to be my point of interest. So all I'm going to be doing right now, I'm going to be compressing it so my stop loss can be very, very small. Okay, so all I have to do is to drag this one to the beginning of the fair value gap and this one to the low of the order block. So I'm going to be naming this one my point of interest. Understood? So all I have to do, I have to send this to the future, waiting for when price is going to get there next. So as soon as price come here, I'm going to be taking my trade setup. And this was exactly the place that I took the trade setup. Okay. So you can basically see how we are able to get our point of interest. So after you're able to get your point of interest, not just a random place, but a precise and a defined place of interest, then the next thing we're going to be pointing out our break of structures. So this is a break of structure 1. This is another break of structure. So usually, if you want to trade this hybrid system, I will advise you wait for 2 break of structures. So because the first one, which is this one, is going to be the liquidity. Because structural liquidity is where we're going to be seeing a lot of early buyers in the market. That early buyers needs to be liquidated before price start moving to that anticipated direction. So I know that you've been in this situation where you place a buy or sell. Before price start moving to your favor, it have to take you out first, then you start moving to your predetermined region, which is upside. It's usually painful, guys. That is why you need to share this video to a lot of people out there who have this problem. When they place a buy or sell, the next thing that's going to be happening, their stop loss will be taken first before price start moving to their direction. So they will think that there is someone watching them behind the scene. Nobody is watching you. Nobody is after you. Okay, it's because you don't understand what this market is doing. Okay, so now the last thing that we're going to be doing, since we'll be able to point out our structural liquidity, which is here, the low of that last break of structure. Okay, so this is the last break of structure. So you're going to be marking the low of that last break of structure, because these are regions where a lot of people want to get into the market very early. Those impatient traders. Okay, these are places that they're going to be keeping their stop loss and they'll want price to move to the sky, which it's not that easy for price to do. Liquidity have to be taken before price can move, before the market can move. Just see liquidity like you bought a new car. You want to drive this car, but there's no fuel inside. How do you expect the car to move? How did you expect the market to move if it did not take out liquidity? So this happens to be our structural liquidity. So you can see how beautifully price came back here, take out all the old lows that was sitting here and dropped to this side, picked us in and moved to the upside. Okay, this is not just a random guess, guys. I keep telling you this. It's not just random. This is a precise and a defined place of interest. Okay, this is going to give you a very, very good edge in the market. Okay, all you have to do, look out for these confluences that I just pointed out right here. First, look out for your trend. Secondly, look out for your point of interest, and you understood how I talked about the point of interest. And the third thing, you're going to be looking out for your liquidity. Then you set your pending order, which is a buy pending order in this case. Then you wait for market to do it. Then let me recap. All you have to do, look out for the trend, look out for your point of interest. So your point of interest should be a point where liquidity was taken previously. Okay, then you go deep inside, look if there is a fair value gap, if there is an order block, you compress them together, then you mark there as your point of interest. After having that, you need to look out for break of market structure, which is this and this. Then you need to look out for structural liquidity. Structural liquidity are places where you're going to be seeing early buyers in the market. That is if the market is bullish. But if the market is bearish, you're going to be seeing early sellers in the market. And guys, this is just a takeaway. Always wait for 2 break of structures, okay? This is a first break of structure. This is a second break of structure. So the second break of structure, which is this one right here, usually is the liquidity. You can clearly see it, the same thing repeats itself here. Let me zoom out, guys. Let me zoom out. This one we have first break of structure, second break of structure. You can see that the second break of structure is the liquidity, and price splash to the downside, take us in and take us to the sky. So guys, this is going to be the final lap on this video. I'm really exhausted right now, and this is Ramadan. Thank you for sticking around, guys. Please, all I ask in return is to subscribe, turn on post notification, and let me know what you learn in the comment section down below, because I'm going to be in the comment section down below, liking comments and hearting comments. So until next time, guys, bye for now. Love you all.